Welcome to This Week in Money. I'm Jim Goddard. Today, David Morgan, editor of the Morgan Report, believes China's buying spree will lead to shortages of gold. Mish Shedlock from Sitka Pacific Capital warns European banks are on shaky financial ground. We'll talk to David Morgan right after this.
Randy Elvis Frisky and his Las Vegas show band relive the movie music memories from Blue Hawaii to Viva Las Vegas, in Ladner, Chilliwack, Maple Ridge, Nanaimo, Victoria, Sydney, Courtenay, Campbell River, Surrey, Kelowna. Details at RandyElvisFrisky.com. Welcome to This Week in Money, the source for market opinions. Sitting in for Phil Mackesy, here is Jim Goddard.
My guest is David Morgan of the Morgan Report, which you can find online at silver-investor.com. David, you're known as Mr. Silver, I think, and you love to dig around for some gold. What's been happening with silver? Has it bottomed out, or is it going to rise up?
Well, I'm convinced, and could be proven wrong even at this late date, the bottom is in the silver market. Said it on too many interviews, but it bears repeating. There was it's called a key reversal on the 28th of June at 1817, closed above 20 on that day. As long as you remain above the 1817, then that's the bottom. And so far from that date till now, which has been about 6 months, we have. Not to say that we're not under 20 again, we are, but we haven't again breached that 1817 level. So the longer, you maintain above that level, obviously that becomes the bottom. So I think the bottom is in silver. Gold is acting weaker than silver presently. Not that silver is acting all that strong, but it's relatively acting stronger than gold. Gold might test the low, which is I think at 1179. It might, in fact, I've said on a few interviews that it wouldn't surprise me to see silver, silver's low already established, and gold probe for a new low, and then looking for both these markets to do much, much better in 2014.
Well, one of the things that's happened this year is the Chinese government has been on a jihad to snap up every physical piece of gold they can lay their hands on. What's that going to do in the new year?
Well, I don't know precisely what it's going to do, when. What we do know is that Bloomberg put out an article that I put on my Twitter feed. It was an interview. It was a gentleman that's pretty high regard in the gold world, saying that basically the London vaults are practically empty of gold. This is something that myself and many others have been talking about for quite some time. And then going back to something I harp on a lot also is that Germany, is told by the Federal Reserve that they can't get their gold back for 7 years. And so obviously there's a very tight issue surrounding the physical gold market. And it looks to me, and the data is verifying it, and these anecdotal evidence that you don't see in the mainstream very often, is that physical gold is pretty tough to get. China's getting all that they can. I don't know if they're draining the market or not, but it appears as if they certainly have taken a great deal out of the London, the LBMA, and they take it at a rate that really isn't knocking the market up. But at some point it will. One of the basic premises that I made way, way back in the beginning of establishing the Internet presence was that we really wouldn't see what I'll call fireworks, but the real strong up moves that we will see in the markets, in the precious metals, until the physical demand runs the price structure of the marketplace. So simply said, that when you start getting to a point where the physical supply is very tight and it's bid up higher than the paper price, and people are willing to do that to take delivery. Now, this is already taking place in gold, by the way, in certain areas of the world. I want to be very clear on that. And it's taken place in silver for years and years and years and years, and no one really seems to know that fact. But in order to buy silver physically in Germany and almost all of Europe, you have to pay a huge VAT, value-added tax. Why? Because they want to discourage physical silver investment. That's why. So anyway, the point being is that the physical market at some point will take control. What I don't know is that going to happen in 2014, 15, 16, or 20 years out? I believe it's definitely happened in my lifetime. I believe it's definitely happening around the 2016 timeframe or sooner. So I'm looking for the market to move back up over the following year, 2014, to retrace basically what it gave up in 2013. So if you look at a chart of gold and silver, you see gold was about 1,700 in January 2013. I think it could easily establish the $1,700 level in 2014. Silver is about $32 in January 2013. I think it can easily establish 32 in 2014. But that's actually a conservative view, in my opinion, because, you know, if China keeps demanding gold and it's tougher and tougher to get the physical, then you're going to see this breakaway in the market where the physical reality hits the paper paradigm. And when the physical reality hits the paper paradigm, it's like saying the SHTF. I mean, this is when something very interesting could take place. Now, so far, this has been tested a few times, and the powers that be have been able to get the genie back in the bottle. But it doesn't mean that it can happen the next time. So, you know, I want to give that caveat, Jim, because these markets are not the easiest to analyze, and when you have, you know, a financial control system that we have, you know, you can still trade the markets. I mean, I get in arguments all the time. It's my experience. I won't make anyone right or wrong. It's been my experience that I'm able to trade these markets even under the conditions that they exist because, you know, the data is there. I mean, when these huge sell-offs that are deliberately designed to take the market down, I mean, the market reacts on volume, and so that's in the data, and that's a technical move. And whether you can see it ahead of time or not is to be determined. I saw it coming on the smashing at the $26 level in silver, and, you know, I think my members, my paid people are, you know, somewhat happy with me. I would have loved to have been able to tell them, you know, 3 weeks ahead of time on the precise day and hour when it was going to take place. I did get it out to them a couple days in advance. Said I'm absolutely convinced this line's going to be broken to the downside. Where it goes, I don't know. It could go down in the 20s, which it did. But anyway, the point being, I'm off on a tangent here, is that these markets are going to be able to overcome all management at some point because, again, the physical reality will break the paper paradigm, and when, I don't know, but it could take place as early as next year.
Well, right now, with prices being so low, won't we see miners, suppliers of gold cut back production or just warehouse it until the prices go up?
Yeah, you're going to see a diminishment of supply because of that. It's not instantaneous. It's a fairly complex situation, but most of these miners that are producing at very low margins or underwater will continue operations, but there'll be less supply. And then you've got these taxing issues. I mean, we're doing a white paper on the Mexican tax situation, and we still haven't finished it. We're being pretty diligent about what we're doing. We'll make sure we're as, you know, humanly perfect as possible that we'll put out for our members as a white paper. But there are more and more actual facts surfacing in what started back, I forget the gentleman's name that wrote the book, Resource Wars. But he predicted, and I agreed with it, and agreed with it when I read the book, that as this financial paradigm unravels into reality, you will find that nation states will start to, you know, wake up and say, you know, what we have is value. We've got oil, we've got timber, we've got whatever the natural resource may be, and why should we give it up for this, you know, this big piece of paper with nice printing on it? You know, in other words, why would I sell these real, tangible wealth for the bond market? So it all hinges around an interplay between what's real and what isn't, and what you're willing to give up that's real for something that is really an imaginary fiction. This, you know, fiat money system that exists as I call it, the paper paradigm. And more are waking up to that. That's why you see China trading with other nation states in their currencies. Not to say that those aren't paper paradigms as well. They are. But the one that everyone seems to want to distance themselves from more and more is clearly the U.S. dollar. And, of course, that's the problem because everyone really is tied to the U.S. dollar, whether they want out of it or not. They're in it. It surrounds the entire financial system.
Nice little toy was dangled out to people called a Bitcoin. China said, we don't like it, it's banned. And it was worth more than the price of gold for a brief time, and now just kind of plummeting like a submarine with screen doors. How does that figure into the resource business?
You know, I feel somewhat qualified to give my opinion. It's opinion only. I mean, I was, given some pretty good information on Bitcoin way back, and couple of years ago, probably at least better than a year anyway. And I thought about doing, transactions with it. I mean, if you're going to do a fiat electronic digital system, I mean, it's got benefits. It's untraceable. There's no middlemen. How secure it is, I'm not certain. I'm not a computer guy, really. But I still look at the main idea of it. It's a very sound idea within the paper paradigm, within the imaginary monetary role. It serves all those functions very well. But in and of itself, it isn't a store of wealth. And classical money has a store of value, no matter what. The price may vary, but the value is there. In other words, an ounce of gold is an ounce of gold, no matter what the price is, and that has some value to somebody at all times, everywhere, always. And so that is the difference between a Bitcoin situation and a physical metal situation. They're two different things. And my bias, or a studied view, I might say, opinion/historical precedence, is that you really want something real. Now, if you want to have Bitcoin as an adjunct to your gold and silver holdings, or you like to trade it or whatever, or you want to use it in a merchant account or whatever, I mean, I'm free market. If you want it, do it. If you like it, great. But I don't buy into the notion that this is like the next generation of peer-to-peer payment globally and takes out the whole system as it exists. Could be wrong on that, but I doubt it. I think we're going to go through much more financial upheavals ahead of us, and the way this thing really shakes out will be very interesting, because the powers that be will do almost anything to maintain their power. And of course, you're seeing the resistance, and one of the biggest resistance to the power paradigm that exists is Bitcoin. I mean, Bitcoin's saying, look at me, look at me, look at me. I'm free. I'm free, and it has all the attributes of the paradigm that exists now. So if you want to compare apples to apples, you can compare the banking system as a digital imaginary point of value, which really has no value. It has a price, and the same thing with Bitcoin. So hopefully I explained that well. That's the way I see it. Again, look, if you want to do it, do it. I mean, I'm all for everybody having the best life they can, making their own decisions, but be educated, make educated decisions. Don't just follow the herd. Think these things through.
More with David Morgan next on This Week in Money.
Always consult your investment professional before making any investment decision.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with David Morgan of the Morgan Report, which you can find online at silver-investor.com. What about the future? We have China making saber-rattling noises, claiming no-fly zones. Canada is claiming the North Pole, so I guess we can charge Santa our GST tax. The reindeer will have to be inspected by, federal officials. What is going on with the world? Everybody wants just a little bigger piece of the pie, and they're talking tough.
Well, Jim, I think you nailed it. I mean, the world is becoming much more tense. War and rumors of war are continuing to increase. I mean, something unprecedented has taken place here recently with Saudi Arabia stating that they may not wait for anybody else. They might do a preemptive, these are my words, preemptive intervention into Iran and or Syria. So things are getting to be very, very tense. As you stated off before we got back on the segment, the Cold War is back. I'd say at least the Cold War, if not, more than that, as you alluded to. So, unfortunately, things are not getting better. They're not more stable. They're not more peaceful. They're more tense. There's more chance of not only war, but decreasing economic situations for most people on the planet. I mean, things are starting to unravel, regardless of what the mainstream propaganda press tells you. The reality on the ground is that things have gotten very interesting and probably will continue to be more so in that direction. Once these trends start, they're very difficult to change, go back. And once someone throws, something over the fence at someone else, most negotiations cease at that point. In most cases, human nature is that those things escalate. So we are at a breakout point, I think, in several areas of the world, as you pointed out, Jim. And, when those take place remains to be determined. But there's so many out there, it's almost inevitable that at least one, if not more, and it could be a domino effect. Once one goes, many more start to jump on that situation, and it escalates. So it's a very big concern to me, especially as a parent, knowing that, I've got a couple of daughters here, and, the days of peaceful coexistence, so to speak, may not be so peaceful in the future. Well, Japan recently announced that they are looking into, increasing their military presence. That's something we haven't heard of for, decades.
Are they building pocket battleships?
Well, it's, and that's only one part of the warfare. I mean, this whole cyber attack thing is very, very interesting when you look into it. And I'm sure many of your listeners have. That there's more ways than just conventional or even nuclear. There's all kinds of electrons that basically the entire system runs on that could be very disruptive. So there's, I hate to be a worrywart and going into the year with all of this potential doom.
I don't know. My fault for watching Tora.
I want to, maintain balance, and think that there's some rationality out there somewhere. But it's something to be aware of. And then, of course, you got to take it down to the individual family, the individual self, your own community, that type of thing. And, take a rational approach and say, there's some possibility for these things, and how would it affect me or my community, and what actions could I take that are appropriate without, sitting there dwelling on it or obsessing about it. But nonetheless, I think to go the other way and put your head in the sand and completely ignore it is very immature also. So I really strive for people to, educate, follow up on this discussion, verify and validate what we're saying, and take an approach that is something that you can, understand what is happening, but not take it too far and reach a conclusion that may never take place. So I think that is as succinctly as I could say it, that, look at it, study it, understand it, take some action, but don't stress about it. There's a lot of things in the world that you really don't have that much control over, but you do have control over, one, your attitude, and two, what minor or major preparations you can make for your own individual case.
Yes, and we've done so many stories lately about do not expect extra government care to look after you in your old age. They just don't have the money to do it. Simple as that.
Yeah. I have to put my tongue in my cheek because I know Jeff Berwick, and we've spoken a few times. Jeff has just put out the new U.S. retirement plan, death.
David, the best of everything. A Happy New Year, a Merry Christmas, a terrific Kwanzaa, good times at the beach if you're headed out to the tropics or Hawaii for the holidays. And any last advice for people looking at their portfolio as they shake it out at the end of the year? Where should they go? What should they do?
Well, thank you. Thank you for all the compliments and the great greetings and wishes. I want to reflect those back to all of our listeners. And as far as, words of wisdom, it's really hard, but I do, strive for balance. I want to balance my life in all realms, and the financial part of my life certainly is one that takes up probably most of my time and energy. But nonetheless, there are things more important than money, at least in my view, and I've learned that the hard way, so to speak. So I just wish everyone, health above wealth. I think when you have your health, you've got everything, because you can be very, very wealthy and be in ill health, and really what good does it do you? And that comes from personal experience that I won't go into. And then I sign off my letter with wisdom beyond knowledge. Wisdom is knowing how the world works and working with it. And certainly there is some evil in this world, there's no doubt about it. But there's also a lot of good and a lot of joy. So I think focus on, what you can do. I mean, what Gandhi said about, what changing the world. The change is really the change of yourself. And so I would look at that. I would look at, look at what you're grateful for, look at being grateful for what you have. And I'll go on just a bit here, Jim, but I think one of the problems with the U.S. in general, speaking in generalities, not in a specific case, is that we as a nation state have taken too much for granted. I think we've gotten too fat for too long, meaning that we've had it too good almost, and that the spirit of America, in my opinion, has been lost to a great extent. And sometimes when you're deprived of things, it sharpens you up. And I think that's going to be the case going forward. I don't look for like a complete meltdown, although I don't rule it out. But I see the continuing unwinding of the system where it becomes a bigger and bigger struggle for most Americans and people around the planet. And I think it could be beneficial from the aspect that will sharpen them up. They'll start seeking the truth more and more. I mean, the people that listen to these type of shows are in the minority right now. I don't know if they'll ever make it into the majority, but I think there's certainly a lot of people that will be coming on board in 2014 and getting that aha moment. Now I get it. Now I see what's happening. And so I'm looking forward to the people at large having a more successful and a more educated and more self-reliant 2014.
After the break, Mike Shedlock on This Week in Money.
Randy Elvis Frisky and his Las Vegas show band relive the movie music memories from Blue Hawaii to Viva Las Vegas, in Ladner, Chilliwack, Maple Ridge, Nanaimo, Victoria, Sydney, Courtenay, Campbell River, Surrey, Kelowna. Details at randyelvisfrisky.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Mish Shedlock of Sitka Pacific Capital. You can also check him out at globaleconomicanalysis.blogspot.com. Welcome to the show, Mike. You said in the U.S., cash house sales. Well, what's going on there? Here we're talking about low mortgage rates right now. Cash?
I had a post out just a few minutes ago where in the United States here, a record number of home sales are all cash purchases. 42%, in fact, of all home sales of home sales are cash only. And what's going on here is you've got a number of pension funds, hedge funds, places like BlackRock that think that from here home prices can only go up, and they are taking these mortgages off the, all of this distressed debt off the hands of banks that are still loaded up with it, and they're doing it with all cash sales. And, the reason is, look at mortgage rates. They're at 4.47%. Interest rates on 10-year bonds are 2 percentage points, or a percentage point less than that. So they're saying, we've got, why not just throw our cash at this? That's essentially what's happening. It also gets banks the cash they need, to get this stuff, off the books and clear everything up. So sort of it's a win-win for the banks and the buyers, as long as home prices keep going up. Will they? I don't know. I keep waiting for a correction. I certainly keep waiting for a correction in the stock market. I think the Fed, because of their quantitative easing, has managed to blow yet another bubble, and this one is at least as big as the one before it. Of course, I think that's the law of Fed and bubbles. Each bubble has to be bigger than the one before it. And if you look back at the dot-com bubble, the housing bubble was created as a means of bailing out banks back in 2000 that had made all these stupid loans to companies that had no revenues, and at the same time U.S. banks were ad hoc to foreign countries, mainly South America. So the Fed created a housing bubble. When the housing bubble burst, it created a bond bubble and a stock market bubble bigger than the one that preceded it. Doesn't mean it can't go on, though, does it?
Well, it seems like that's their hope. I mean, they're tapering their quantitative easing, but just slightly.
Well, yeah. I mean, they're purchasing $85 billion a month, and they're going to, cut it back by $10 billion a month. I think if 10 years ago I would have made a claim that the Fed would call it tightening to reduce their asset purchases from $85 billion to $75 billion and call that tightening, I think people would have thought that I was crazy. Yet, that's the talk on the street. Oh, the Fed is tightening. I don't know. At one point, the market's just going to say, enough is enough. And if you look at the trends in earnings, earnings are disappointing. And if you look at 10-year PE ratio, which is just, average, ratio over the last 10 years, the Case-Shiller PE ratio is at its, I think its second all-time high, perhaps compared to 2000 or 1929. So, but investors are unfazed by all of this until, of course, the bubble breaks.
Where should they be going right now? Should they be dumping their shares and maybe cashing out and wait for the thing to go down and then rebuy all the good stock again at a lower price?
Well, that's what I would have said 2 years ago, and for 2 years have been wrong. So I would repeat the same advice today. It seems like people didn't take it 2 years ago, and more power to them. Will they take it today? And that's just it. Everyone always seems to think that when the downturn hits, they're going to be able to avoid it, and yet history always suggests otherwise. I don't know if you recall, but in 2007, August of 2007, Chuck Prince, that was the then CEO of Citigroup, came out and said, as long as the music is still playing, we're dancing. And 2 months later, he danced out the door when the shit hit the fan, and he was literally fired. And Citigroup darn near went under, and the only reason why it didn't go under was, the Fed literally propping up Citigroup. So here we have the then largest bank in the country almost went under because of leverage, and Chuck Prince is still dancing on the street, saying, "Well, as long as the party's going on, we're gonna keep dancing." So I think we're in a similar setup here. When this one ends, I don't know. I actually thought that it would have ended about 300 S&P points ago. Actually, I thought it was going to end before that. So that just shows you how much longer, how much bigger these bubbles can get than anyone really thinks. Actually, most people don't even think it's a bubble.
What would you call it then if it's not a bubble?
Well, I guess that's it. Meanwhile, over in Europe, we've got a different kind of setup. They've been struggling in Europe to create this banking union. And there were a lot of cheers over the last week that they finally did stuff, and that states ceded, sovereign rights, blah, blah, blah. If you actually look at the details of the banking union, they're going to create a 55 billion euro resolution fund, but not right away, of course. It's going to take 10 years to do that. So that's by 2010, they said that they were going to come up with 12.5 billion euros. Meanwhile, the balance sheets of the banks in Europe, not even all of them, but just the ones that would be governed under this, that Germany carved out a nice little exclusion for some of its banks, is something like 26 trillion euros. So here we have a 12 billion not now, but by 2020, fund to bail out any banks that go bad, when they're stuck in their own, corporate bonds, and there's $26 billion worth of, talk about over leverage. It's like the leverage in European banks is way, way larger than U.S. banks, and I still don't think that U.S. banks are healthy at all. So, one way or another, Germany is going to pay for itself, and I don't think German citizens realize that. They carved out this niche for German banks. They passed this banking union in name only, with no funds behind it, and bailouts of banks in any countries that happen before the next 10 years is going to come from, either the taxpayers in those countries or bail-ins in those countries. So, anyone that has their money in Spanish banks now, or Italian banks, or any bank that anyone thinks is remotely in trouble is a fool. And it's shocking to me how the citizens in these countries have not figured that out. And eventually there's going to be a run on banks in one of those countries, and I would probably suggest Spain, Portugal, Italy are likely targets.
Was Britain smart to keep the pound? I mean, the pound has just been skyrocketing in value lately.
Britain was smart to keep the pound. They've got a big housing bubble over there. The biggest housing bubbles in the world are, Australia is, I don't know, seems to be correcting. But China, Canada, the UK have huge housing bubbles. And imagine what that bubble would look like if, had they been, on the euro with, a sinking euro relative to what the pound is now, and also with lower interest rates before the, UK. Now we've got low interest rates globally. So, the central bankers' only mechanisms for, fighting this financial crisis has to build bigger bubbles in assets, in equities, in bonds, in housing. So the one place I would have thought that would have benefited from all of this was gold, and it hasn't, at least yet.
We'll have more with Mike Shedlock next on This Week in Money.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Mike Shedlock from Sitka Pacific Capital. What is the standing of gold? This past year, China has bought every physical scrap of gold they've been able to lay their hands on, yet the price remains suppressed. What's going to happen when people turn around and want some physical gold and find out there's nothing on the shelf?
I don't know that we're going to find out that there's nothing on the shelf. There's certainly those rumors. But yes, China's buying gold, and so is India. In spite of India has to pay a premium because of capital controls imposed by the government in India. Indians are paying 30% over spot in some cases just to be able to buy gold, and they're still buying it. So they've got import restrictions. They've got a tax on gold. And people are, and they're still buying it. So, demand is high. We have what, some people believe is, manipulation in the gold markets. I don't know that manipulation in the gold market is actually bigger than manipulation anywhere else. It's not that I feel that gold is unmanipulated. I just think that the market makers, the J.P. Morgans, the ones are quite willing to take an ill-gained profit, either driving the thing down or pushing it up, depending on whatever it is they want to do. Others feel differently. That's fine, but I just historically, when we've seen this amount of printing, and it's global, that gold has reacted positively to that. So why hasn't it this time? And the only thing I can come up with is perhaps one of the biggest bubbles of all. And that's a bubble belief this time that the global central bankers have everything under control. Well, if everything was under control, I don't think we would need QE in the U.S., QE in the UK, QE in Japan, and if you look at the banks in China, they're probably in as bad a shape, if not worse, than the banks in Europe, which are worse than the banks in the UK, and one even has to look at the Canadian banking system here, actually, with the banks in Canada shielded themselves because, government ownership of a lot of the mortgage market in Canada. Well, what happens when Canada's housing bubble pops? And I don't know, maybe that's one of the factors behind the falling Canadian dollar. And certainly we've seen a falling Australian dollar as well. But the Reserve Bank of Australia came out with statements, explicitly stating they want a lower, Australian dollar. That's the only remedy everywhere for all these central bankers to fix their own internal problems is by driving, their own currencies lower. And if you look at it, it's impossible. It's impossible for every currency to fall relative to every other currency. It can't be done. Yet, Japan wants to drive the yen lower. The U.S., Bernanke would be happy with a lower dollar. Australia has come flat out and stated they want a lower Australian dollar. China really doesn't want the yuan to rise. So where does it all lead? Switzerland has taken steps to make sure that the franc doesn't rise versus the euro. It's mass insanity, if you ask me. But this is what's going on. And it's created this illusion because it has fueled the stock market and the bond market. People are saying, if the stock market's going up this so much, why do I need gold? So right now, gold is out of favor. Precious metals are out of favor. But I don't think it's going to last forever. I think we're going to have a genuine currency crisis somewhere. My actual guess is that it will be first in the yen, but we could also see it in Europe if the Eurozone starts to disintegrate, and which I also think is a given. If you look at the pitchfork protests in Italy, we've had protests in Spain. The Catalonia region in Spain it said it's going to have a referendum on independence. All of these things are signs of massive amounts of unrest in Europe that just can't go on the status quo.
Well, how about we throw in the Ukraine as well, where it looks like the average citizen wants to be part of the European Union, but their president has signed a deal with Russia with a $50 billion bailout for them. Mm-hmm. I don't think Europe could afford to do that.
No, where's $50 billion going to come from? It's not. And, but things are simmering. I don't know how long the pot can simmer before the lid blows off. That's the question. A highly regarded reader, who is from Italy but now lives in France wrote me, because I asked her opinion on these pitchfork protests, and they've gone on in a huge number of cities. But, she responded that these people have nothing at all in common. Some of them want more government regulation. Some of them want less government regulation. Of course, they all want more handouts in turn of jobs. Some of the farmers, that's how it got the name pitchfork protest, are protesting, the rise in energy costs and the like. And we've seen protests of a similar nature from the agriculture community in France. So people are simmering. We've got the rise of Marine Le Pen in France. She's an extreme, right-wing nationalist who wants to get France out of off of the euro. And but when does the pot boil over? And the banking resolution says, there's going to be no mutually shared responsibility. Germany's not going to lift a finger to any of these other countries, and so all the citizens of Germany wave their German flags and say, yay, this is not going to hit us. Well, it is going to hit them, because Germany's responsibility for Spanish debt, should Spain or Italy or Portugal decide to leave the Eurozone, the German responsibility for all those debts is like 30%. So Germany's going to pay one way or another. Either they're going to pony up more cash to bail out these countries, or eventually there's going to be a very, very disruptive breakup of the Eurozone. And since Germany shows zero, tolerance for any cash infusions, my only conclusion can possibly be the Eurozone is going to break up in a violent manner. And, no time frame on that. I don't know whether, it could start 2 weeks from now, or it can start 2 years from now. But the longer things simmer before they explode, the bigger the problem is going to be.
Can you see Putin extending a helping hand to other countries?
No, because none of the other countries would be interested in aligning themselves with Russia. Ukraine's a special case, and maybe there is another Baltic country or that might consider closer ties there with Russia. But we're talking about a problem that, if it really hits the fan the way I expect it to, is going to be so big that I don't even think Germany could step up to the plate and bail them out. Other than what I said is to literally write off all of this European debt that they're responsible for, based off of their percentage in the EU. So when all this happens, I don't know, but I would not have thought that it would have gone on this long. But for now, central bankers have convinced people that they can keep this up forever. And I say, well, let's wait and see.
They never have been able to do that in the past.
No, and history's on my side. I just can't put a time frame on it.
Mike, always a pleasure chatting with you.
Well, it's a pleasure to be on the show, and hope to be back on.
Is there a website people can go to check out some of your philosophies on what's happening and not happening?
globaleconomicanalysis.blogspot.com, but that's the hard way to find it. Just do a Google search for Mish, M-I-S-H, take you straight to my blog.
Best of the season.
Oh, happy holidays to you and to all of my Canadian readers up north.
Thanks to our guests, David Morgan and Mike Shedlock, and thank you for listening. I'm Jim Goddard for Phil Mackesy. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.